What separates billionaires from everyone else? Is it sheer luck, privilege, or do they know something we don't? Today, we're cracking open the vault of wealth-building strategies used by the ultra-rich. From mastering investments to leveraging other people's resources, these success secrets can reshape your financial journey. Ready to uncover how billionaires think and grow their fortunes? Let's dive into the playbook that could change your financial future forever. Number 1. Real estate builds millionaires. Private equity creates billionaires. Real estate has long been a favorite tool for building wealth. Many millionaires attribute 35% to 50% of their fortunes to real estate. It's reliable, tangible, and relatively easy to grasp. But among billionaires, real estate is often labeled the dumb millionaire's game. Why? Because their wealth-building strategies focus on business ownership and private equity, investing in companies or acquiring stakes in businesses. Here's the difference. A millionaire might own a few apartment buildings. A billionaire? They own a company that builds those apartment complexes, invests profits into private equity, and scales repeatedly. Private equity isn't about quick wins, it's about long-term growth. Want to think like a billionaire? Consider how you can grow your investments beyond real estate. Number 2. Harness other people's resources for your financial success. No billionaire builds their empire alone. They use what's called other people's money, OPM, to create and expand businesses. This strategy allows them to start big and grow faster. For example, imagine starting a business that needs $100,000. Instead of draining your savings, you ask investors for help, offering a share of the company in return. This approach allows you to scale your business exponentially. Billion-dollar companies like UiPath began this way, raising funds early and growing their valuation to $35 billion. The lesson? Sharing ownership isn't a loss, it's a tool for massive growth. Number 3. Most billionaires don't own 100% of their business. Here's a surprising fact. Many billionaires don't fully own their companies. Jeff Bezos owns 12.7% of Amazon, and Elon Musk holds 13.3% of Tesla. Why? Because they understand the power of partnerships and investments. Clinging to 100% ownership can limit your growth. Sharing equity lets you bring in talent, raise funds, and expand opportunities. Remember, owning 15% of a billion-dollar company is far more lucrative than owning 100% of a small business. Number 4. Everything is a buy low, sell high equation. Wealth building boils down to one principle: buy low, sell high. This applies to physical goods, services, and even attention in the digital age. Tech giants, for instance, acquire users at minimal costs and monetize them later. Two factors matter here: markup, the profit margin per transaction, and scale, how many transactions occur. Amazon excels at scale with small margins, while Tesla commands higher margins but fewer transactions. The ultra-rich optimize both, constantly seeking better purchasing opportunities. Their true skill lies in recognizing undervalued assets, whether in products, services, or markets, and flipping them for massive gains. Wealth isn't just made by selling, it's made in the moment you buy wisely. Number 5. Many billionaires don't start from scratch. Contrary to popular belief, many billionaires didn't start with nothing. Jeff Bezos received $250,000 from his parents to start Amazon. Elon Musk's father was a multi-millionaire. But before you get discouraged, remember this: access to education, the internet, and tools like LinkedIn are modern advantages. You don't need millions to start building wealth. What you need is a clear vision, relentless drive, and the ability to use the resources at your disposal. Number 6. Billionaires are obsessively driven. Here's the uncomfortable truth. Most billionaires sacrifice almost everything: sleep, family time, and personal lives for their goals. Their drive is intense, their focus unwavering. This relentless pursuit often comes at a cost. While this level of commitment isn't for everyone, there's a takeaway. Success requires focus and hard work. You don't need to sacrifice everything, but you do need a level of discipline that separates dreamers from doers. Number 7. Art as an investment. Art has become a favorite investment for billionaires, offering a unique way to grow and safeguard wealth. Unlike cash, which loses value over time, or stocks, which can be volatile, art holds its value and often appreciates. High-value works by renowned artists, known as blue-chip art, are particularly sought after. These pieces are stored securely, and their mobility makes them attractive assets. During inflation, art often outperforms traditional investments. Some billionaires also use platforms like Masterworks to diversify their collections. Beyond financial returns, art symbolizes status and cultural influence, making it a dual-purpose asset that enriches portfolios while showcasing refinement and taste. Number 8. Cash isn't king. The rich don't hoard cash. They leverage assets to generate wealth. Billionaires keep less than 5% of their wealth in liquid assets like cash. Why? Because cash loses value over time due to inflation. Instead, they own equity in companies or other income-generating assets. For example, Elon Musk used his Tesla shares as collateral to buy Twitter, avoiding taxes on asset sales. This strategy allows them to grow wealth without eroding it. Cash might feel secure, but it's static. Assets like businesses, stocks, or real estate generate income, appreciate in value, and create long-term growth. For billionaires, cash is merely a tool, not the end goal. Number 9. Enterprise beats consumer sales. Billionaires rarely build their fortunes selling directly to consumers. Instead, they focus on enterprise clients and business-to-business B2B sales. For instance, Amazon's retail operations often operate at a loss, but its cloud platform, AWS, brings in over $80 billion annually. Similarly, Google offers free email for personal use, but charges businesses per user, generating billions. The secret lies in scale and consistent revenue from contracts rather than one-time consumer purchases. Enterprise clients value reliability and are willing. Shifting focus from consumer markets to business deals offers higher returns, longer-term stability, and ultimately, the pathway to immense wealth. Number 10. Turning crisis into opportunity. To billionaires, crises are not setbacks, they're opportunities. While others panic and sell assets, the ultra-rich strategize and invest. For example, during economic downturns, Warren Buffett and Charlie Munger famously buy undervalued companies, turning short-term market chaos into long-term growth. They think in decades, not days. Their approach to recessions is like shopping during a massive sale. They acquire valuable assets at steep discounts. This mindset separates them from the average person, who often focuses on immediate concerns. By staying patient and seizing opportunities in adversity, billionaires capitalize on volatility, proving that foresight and calm decision-making are essential for extraordinary success. Number 11. The power of decision-making and persuasion. Billionaires succeed by making fewer but highly impactful decisions. Warren Buffett credits his fortune to a handful of well-timed moves rather than constant activity. They focus on high-value opportunities, carefully analyzing risks and rewards. Beyond decision-making, persuasion is equally critical. Whether it's rallying a team, securing funding, or negotiating deals, the ability to influence others is invaluable. In their early stages, billionaires master the art of building trust and selling their vision. As they grow, persuasion extends to motivating employees, investors, and partners to align with their goals. These combined skills, decisive action and effective persuasion, are cornerstones of their success. Number 12. It's not just about stocks or luck. Contrary to popular belief, stocks and luck rarely make billionaires. While investing can grow wealth, it takes more than compounding returns to reach the top. The ultra-rich don't rely solely on the stock market. They build systems, innovate, and scale ventures. Luck may play a role in opportunities, but their success stems from preparation and strategic thinking. Warren Buffett, for instance, grew his wealth through calculated acquisitions, not just portfolio investments. Simply saving and hoping for the best won't lead to billions. True wealth comes from creating value, building businesses, owning assets, and leveraging networks. Billionaires make their own luck through relentless action and foresight. And there you have it. Insider strategies from the ultra-rich that you can apply to your own financial journey. Which of these lessons inspired you the most? Let us know in the comments below. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell for more eye-opening content. Start thinking like a billionaire today, and who knows, you might just become one tomorrow.